Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Tuesday morning, yesterday was quieter, except, of course, the rupee, which hit a new all-time low. Let's hope that there is stability, continued stability as we count down the last, 10, 12 days of 2025. I'm Prashant, with me, my colleagues Nigel and Surbhi. Guys, good morning.
Hi, morning.
Hi, morning, folks. Markets today, actually, Asian markets not quite feeling the love because there's a big slide out there between 1 to 2%. But let's see, because the bulls did prevail yesterday. Yes. They did manage a 26,000 close. So maybe they'll continue to be in this magic market.
Well, that's right. India outperformed yesterday. So we hope that we continue, because for the year we've been underperformers. But off late, last 2.5 months, India's actually outperformed or performed in line. Pretty good times.
Absolutely. And I think let's see if 2026 can be built on the back of this underperforming year in a better way, in a better setup. It is certainly a better setup. I mean, how much of the, so to speak, poison is out of the system in terms of high valuations and all of the excesses, etc., is, of course, up for debate. But certainly, it's been a tough year, and we look ahead. Now, let's just quickly take it from the top in terms of what you need to know as we begin this new day. So, U.S. equities paired early gains, and that's a final close. Nasdaq down 0.6, S&P down about 0.16%. Continued pressure. I mean, these are the two names I put out yesterday as well. So, and both reported on different days on last week, Broadcom and Oracle, and both on their respective days when they reported fell 11%. Oracle down another 3%. So 11% last week, 4.5% yesterday, 3% today. So that's a steep cut for Oracle. Broadcom was down another 5.5% after Friday's 11% sell-off. iRobot was down 70% after the company essentially filed for Chapter 11 bankruptcy. And basically decided, it's kind of sort of proposed that it sell itself to its Chinese suppliers. In terms of just some news about who's ahead, and this is very, very stark, it was almost as if the prediction markets were betting on the fact that Kevin Hassett will be the new Fed chair and that Trump would pick him. But guess what? It's complete U-turn, and prediction markets are now favoring Kevin Warsh as their new favorite Fed chair. So two Kevins in the race, and we'll see. I mean, who comes out on top? But in terms of what market perception is, it's Warsh who's now ahead. 10-year yield was down 1 basis point, not very much by way of change. Oil prices are about 60, so they've lost about $5.5 from the highs. And this, of course, is on the back of expectations once again that this time, and there'll be many this times, the Russia-Ukraine war comes to a halt. Pressured, of course, brokered in that sense by President Trump and the United States. Zelensky essentially saying that they're going to drop their ambition to ever join NATO is a big one. It was the crux of the issue, but there are still territorial sort of aspects which need to be settled. And whether Ukraine will cede territory, which Russia says it now occupies and it will not give back. So those are things which will need to be resolved. Tonight, you get the U.S. November jobs data. Consensus expects 50,000 job additions. There'll also be October retail sales and weekly ADP print. But the big one, of course, is the November jobs print. And, now, of course, we're back on track. It was all over the place because the government shutdown. Usually the data comes out on a Friday. Rupee all-time low against the dollar, 90.78 is where we sort of made that low, and we left off at 97.3. So, again, focus on this one. It's been a bit of a worry, right? I mean, losing on currency, even as you're looking to make capital gains, has been problematic. Now, just the levels, not very much changed because, I mean, hardly any change at the index level yesterday. The 20-day is 26,031, almost unchanged from where it was as of Friday's close. The Nifty Bank 20-day is 59,292, and we're very, very around these levels as of yesterday's close. The downside level, 25,750 on the Nifty and 58,850 on the Nifty Bank. So that's the overall picture. Yesterday, as we put out, the insurance amendment bill did not go through. In all likelihood, perhaps it gets to the Parliament today. The Cabinet's already cleared it So keep an eye out on that. We'll get you when it's tabled and when it's cleared. F&O positioning, F&O stats, how are we looking? Nigel is standing by with that. Nigel, over to you.
Well, a quick word first on the cash market flows. And yesterday you had the DIs that bought while the FIs sold. And there was a marginal net buy number coming in from the institutions. You know, the DI buying outweighing the FI selling yet again. But the bigger point was in terms of volumes. The volumes yesterday from institutions, both the FIs as well as the DIs, were relatively lower in comparison to the average that you've seen in December. It's that holiday, season that's picking up, and also lack of any large trades, actually. Both those two could have weighed, but there's going to be a declining trend from here on as institutional participation does dry up for a couple of weeks or so. Moving to what the FIs did on the future side, well, they covered some mild shorts on the index, but they added some shorts on the futures market itself, though they continue to remain net long on the stock futures and they're net short on the index future side of things. In fact, to put a percentage to that, the FI net short positioning in percentage terms on index futures is at around 89%. Moving to the options data, then the PCR, that's gradually moving towards the 1.2 odd mark, more or less in the middle of that range that we have seen. 1.1, 1.2 is what we've seen for the last few trading sessions. So here action both on the call as well as on the put side. And yesterday's trade, actually, writers made money. The 26,100 call, there was massive writing being seen out there, with the premium declining to less than 30 rupees. Even if you look at the 25,900 put, well, out there as well, there's a big amount of open interest built up, and that premium's down to around 20 rupees. So just punching in both these premiums and the kind of action that you saw in the options market, you get a broad range. Remember, today's the weekly expiry that plays out as well. So the broad range you're looking at is 25,850 on the downside and 26,150 on the upside. That's the range for the day itself. But the Nifty Bank, that found its form yesterday. It's trading above the 20 DMA, which is the crucial mark that we're seeing out there. And that one will have to lead the way. Remember, the recent high is at around 60,115 odd. But I think the index to track, not just for now, but for the next few months, is going to be the tech index. Because that AI bubble gradually seems to be losing a lot of interest out there. That AI trade that was very, very strong all through 2025 in the, in the NASDAQ as well, it's replicated out there. But the IT index, after underperforming, for majority of the year, it's gradually been showing signs of outperforming. So let's see whether or not the tech index can give up its recent underperformance for the year and actually go by the trend that we've seen in the last 3 months, when tech has outperformed the Nifty and outperformed most indices. I think that's the index to watch for the next couple of quarters.
Oh, absolutely. Tech it is. And tech is getting beaten up quite badly across Asia, actually. Most of the screens are flashing red, like we mentioned. And the cuts are as much as 1% to going up to 2% in the South Korean markets in their mid and small cap indices. So it's pretty much a all fall down kind of a morning. Can India buck the trend? By the way, yesterday's trade numbers were quite encouraging, because not only did our trade deficit reduce, India's exports to the US, by the way, have shown improvement. And much, much better in November compared to what we saw in October. So overall, the trade numbers are looking good. Whether that offers any respite to the rupee or not, we will have to see, because that's been the biggest problem point for the market, the clear slide. Now, this is what we're getting because of this overall weak global sentiment. Will probably start gap down once again. It's like a repeat of yesterday. Yesterday, the bulls managed to prevail by the end of day's play. Let's see how today shapes up. 70 points lower. That's the indication on the GIFT Nifty, at least as of now. Well, let's move on. We have independent emerging market expert commentator Jeffrey Dennis joining in. Mr. Dennis, thanks so much for being with us. Season's greetings to you. Hope you're getting all set for a great holiday season. So that's really the thing, right? As we enter this end of the year period, the question on the AI trade and whether what is right now a bit of a rotation. It's a rotation away from large US AI stocks into other parts of the US market. Whether this rotation is going to gather momentum in 2026, and if yes, what does it mean for global equities?
I think you're seeing a mild rotation now. You're not seeing it being very convincing yet. I mean, the S&P itself is only about 1 to 1.5% off its high. So there is the beginnings of some rotation. I suspect you'll get some more rotation if you look at next year, but I do not want to turn bearish on the AI story, the technology story. So I think the amount of rotation you get will be relatively small, but yes, it's obviously to a certain extent it's underway. Now, what does it mean for global markets? Well, if you look at some of the giant winners this year in global markets, obviously Taiwan in particular, Korea as well, in particular Korea, which is up 80% in dollar terms this year, were you to start to see significant rotation, those markets would come under pressure. I mean, TSMC, for example, in Taiwan is over 10% of the EM index, is more than double the weight of any other individual stock. So obviously that market would be vulnerable. And I think if you were to get a more significant rotation into some of the consumer names, for example, the more defensive names, perhaps, I think India, having done so poorly this year, would be a logical beneficiary of that.
Dennis, hi. Morning. Prashant here. Now, you saw the headline, right? I mean, I don't think there's any market signal from it, but Elon Musk hitting a new high in terms of his wealth and his fortune. Of course, I mean, pushed by SpaceX's latest round, right? It's just a signaling thing, right? And so much in the US, so much of all of this in the US is happening actually in the private markets, right, Dennis?
Yes,
not really available to public investors. I mean, it's actually exactly the opposite here in India. I mean, public markets are booming. Actually, if anything, in the US, public markets are shrinking.
Yes, that's true. And obviously, if you look at Elon Musk himself, he's got obviously a lot of ownership and a lot of different businesses. It's clearly not just a Tesla story for Elon Musk anymore. And you're right that you are seeing a lot of private market action. I think ultimately some of the private market action will turn itself into IPOs down the road. Whereas, as all your listeners and your viewers know, India's had a very, very strong year in terms of IPOs. Now, this could be one reason why the Indian market is underperformed, because you've had big new supply of stock, whereas you're not getting that as far as the US is concerned. Frankly, if the latest numbers suggest that Elon Musk is yet more wealthy than before, I don't care about that, frankly. I think the issue is, are you going to see these stocks, of which Tesla's a good example, are they going to deteriorate and weaken next year? And I tend to believe this is completely different from the 2000 tech bubble that burst, and you had so many companies that had poor business models, hardly any revenues of any at all, no profits. These companies are running real businesses. And so this is why I don't think you should get too bearish about that. On the contrary, Musk is doing very, very well. A number of other companies are doing well. And at the end of the day, I think any rotation out of these technology names, the AI names, the Mag 7, will probably occur next year. But as I said earlier, will be limited as far as I'm concerned. And that will obviously impact global markets as well.
No, I mean, that's absolutely fine, Dennis. I don't think anyone is suggesting that this is the end or anything. And you'll go through these, because I guess no one has the answer, right? People have opinion, but no one has an answer. It's too tough a question to answer, whether all this investment is going to eventually lead to where the value will settle, et cetera, et cetera. But it's a real thing. I mean, just think about it. 3 weeks back, 4 weeks back, the CBOE VIX was at 40. And there was this entire correction which happened with NVIDIA and all these stocks which sold off 10, 12%. We're all back, as you said, within a couple of percentage points from a new high. So yeah, I mean, looks like another phase of this in and out, but I think that will continue into 2026 as well. Nigel.
Well, hi, Dennis. Good to see you. I wanted a quick word in terms of that trade deal. We waited a few months. I think in the last few months, you've chatted numerous times, and the expectations were it's coming in the next month. I mean, what are your expectations on that front? And do you believe that that's going to be one of the driving factors to bring this FI money back to India, which, we've seen billions of dollars move out of the Indian markets in the secondary market. In the primary market, actually, there have been inflows. But net, there have still been outflows coming in from the FIs. So your comment, both on the trade deal as well as the FIs coming back?
I don't have any inside track as to whether you get a trade deal in the next month or so, but I suspect the answer is yes, because at the end of the day, the US has come to a trade deal with so many other countries over time, and I think India will probably be part of that. So that would be my first suggestion, but as I say, I don't have any particular inside track on that. But were that to happen, I think it would be a significant catalyst for India to do much better in 2026. Now, However, I think the biggest catalyst for India to do much better next year will be the clear evidence. We had some more data on this yesterday, your time, is of the weakness of the Chinese economy. The economy is slowing further. Very weak retail sales, very weak investment figures, very weak IP numbers. And I think what you're going to see here is a definite rotation from China towards India as you head into 2026 and beyond. And of course, given how poorly India has done in relative terms compared to China and Korea and Taiwan, there's hardly a valuation case for India, but the very high valuations that you had, let's say 12 months ago, have come in significantly in relative terms, and that's going to be a factor as well. But no doubt the trade deal will help. I think the relative valuation narrowing versus other Asian markets will help. And don't forget also the oil price. Brent is pushing down towards $60 a barrel. I think that will help as well. And as I've argued many times in this show before, there's still scope, in my view, for the RBI to cut interest rates again, as they did, of course, the other day. So I think it's a much, much brighter outlook for India next year, which I think will presumably will bring the FIIs back. But for me, the biggest driver of this is probably going to be a little bit of, what should we say, a little bit of exhaustion about the Chinese rally in the face of what is a continually weakening economy there, which the government doesn't seem to know how to bolster and get growth back up again. That's going to be a factor pulling money out of there and pulling it back into India.
Well, that's an optimistic note, and it's good to have that after what's been a really challenging year. And I mean, who knows? I mean, there's so much talk about Russia, Ukraine, right? With the US president now saying they're closer than ever to a deal. And if that gets done, then maybe the additional punitive 25% on India, maybe that goes. So yes, fingers crossed for 2026. Mr. Dennis, thanks very much for joining in. And once again, wish you a very Merry Christmas and a Happy New Year in case we don't speak again till the end of the year. Thank you for joining in.
Very much.
Okay, all right. Well, with that, let's move on. Tell you what else we have lined up for you on the show today. At 8:30, we'll have Dharmesh Kant joining in. We'll discuss a couple of fundamental stock ideas with him. At 9 a.m., Karan Torani of Elara Capital joins in. We talk about the big surge in PVR's stock price. They've launched some new screens in the south, and plus there is the weekend release of Dhurandhar, which has been very well received. So more on PVR in a bit. At 9:20, JP Morgan's Rajiv Batra joins in. He's our market master of the day. At 9:35 a.m., the management of Narayana Health will be with us. We'll discuss the impact of price hikes and the revised CGHS tariffs on the hospital's revenue. After that, the management of Kaplan Point Labs is going to be with us. We'll talk about the business outlook, looking at the next year. Towards the end of the show, in our special segment, It's the Economy, Lata will be speaking with Santanu Sengupta of Goldman Sachs and Madhavi Arora of MK Global Financial Services.
Time to slip in a short break. Got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Shark Time segment. I give you a sneak peek. Britannia, Delivery, Zydus Life, Kim's, Synor's Pharma, all of them will be reacting to positive news flow. Out of the list, HCL Tech, Intellect Design, GOCL Corp, Geojit Financial, while the lone stock that will be reacting to negative news flow is Zota Healthcare. Take that break, come back into further detail on all of these names.
Welcome back. As we've been telling you, it's going to be one more opening, probably on the downside because of the way global cues have shaped up. It's a bit of a sell AI kind of a morning. That's what we had from Wall Street, and that's how Asia is pretty much reacting right now, down between 1% to 2%, depending on which Asian index you're looking at. And in the midst of all of this, the implied open is telling us it will probably start lower. Now, it's actually improved. It was 90 points lower. Now it's about 75 points lower. So let's see how this shapes up. As always, lots of independent individual stocks to watch as well. So let's straight away get to it with our research team. Here is the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Mangalam, let's start with Britannia. So there are some changes in terms of the top management.
Well, it's small developments, but important ones. Why do I say that? Because Subhashis Basu has been appointed as the head of their dairy business. Subhashis was earlier CEO at Anik Milk, and alongside that, he's also been earlier associated with Pratap Snacks, Mother Dairy, and PepsiCo so brings in a fair amount of FMCG experience too. And the current head of dairy, Abhishek Sinha, has been elevated to Chief Sales Transformation Officer. Remember, dairy accounts for high single digits to low double digits of their overall revenue. It has been a growth driver for the company. So management change is expected to boost that business as well. Additionally, remember December 15th was yesterday when Rakshit Hargave from Birla Opus took over formally as the MD and CEO of the company. So which is why maybe some leadership transition happening out there with changes to the overall leadership portfolio.
Okay, all right. So we'll watch out for this. And yeah, that's a good one to remember as well. There's a new MD and CEO finally officially taking charge as of yesterday. But Mangalam, you're also watching out for delivery, I think. Tell us why.
Yeah, incremental small changes in both Britannia and delivery, but important ones at that as well. Delivery, remember, has now been mindful of the quick delivery for a lot of the e-commerce, small commerce players as well. So they've launched on-demand intra-city offering in Mumbai and Hyderabad. So if you have the delivery app and if you're a small business, if you're a D2C person or an individual, you can get your parcel picked up in 15 minutes of booking, and that gets transferred or transported intra-city. So basically, their version of QCOM logistics for people who want to take note of their services. They will expand this service to more cities. Remember, in cities like Mumbai and the metros, there is a model like this for individuals in the form of Borzo and WeFast, along with the others. So let's see how delivery competes with all these players out here.
Mangalam, so I can order food from Delhi?
You can't order food from Delhi. It's intra-city, so you can probably...
You can get food from home or parcel from home picked up.
Yes, so if you are making great food at your house... Yeah. So if you're making great food at your house, you can get it picked up and delivered to our office for everyone. In 15 minutes, they'll pick it up, and maybe around 30 minutes.
That's not even a hint. It's so direct, it's not even a hint.
Mangalam, please tell mom that palak rice hasn't come for a while. So, just
we don't need delivery for that, Nigel. I'll bring it myself.
Thank you. 2026 missed it, bro. I hope auntie is watching.
But this is more the dabba wala, right? I mean, basically.
No. It's I've done it. I have forgotten parcels, clothes, here and there, a charger left at a friend's house. You simply use it. It used to be what Dunzo was once upon a time, which was known as Bangalore. Borzo, as Mangalam said in Bombay. You just get your small parcels picked up. Very helpful.
Okay, all right. Mangalam, thanks very much for that. Well, more stocks with news flow. Ekta is here with details. Ekta, morning.
Well, yes, I'll start with Seneris, where they've acquired Apnar Pharma for 91 crores. They have a US FDA, UK, a Canadian approved facility in Gujarat. 91 crores will comprise of 76 crores of total debt. Remaining will be 15 crores via 2 tranches. KIMS is in focus because they've commenced operations at a new hospital in Bangalore. It's a 350-bedded multi-speciality hospital offering advanced care in cardiac, neuro, robotic sciences. Zydus Life is in focus because US FDA has accepted Sentinel's resubmission of a new drug application for a particular drug under development, which is CUTX-101. Remember, Sentinel is Zydus' biopharma arm. This drug under development is used for pediatric conditions. And remember, they had received a complete response letter, or basically some questions from the US FDA with regards to this particular drug. And they've responded to them, and now there is a target date which is set by the US FDA where they will respond to this particular application by the 14th of Jan. Zota Healthcare, there's a QIP launch, total size 400 crores, base size 300 crores, green shoe option 100 crores, indicative price is around 1,535 rupees per share, which is a discount, 9% discount to its last close.
Okay, all right, Ekta, thank you very much for that. So keep an eye on some of these names. Well, more stocks with news flow. Upasana is here with the details. Upasana, morning.
Good morning. First up, let me start with HCL Tech. Orobay Technologies expands a digital transformation partnership with the company to boost the manufacturing excellence and innovation. Next up is Intellect Design. The company partners with 35 Canadian credit union across 8 provinces. And the second news flow here is that it has called off its JV, which was signed between the company's wholly owned subsidiary in UK and ITI-XA for the establishment of a joint venture entity in Gift City, Gujarat. GOCL also in focus as board has approved a scheme of merger by absorption of HNPCL into GOCL. Now, HNPCL is engaged in the business of power generation, transmission and supply. And if we look at the half-year revenue, it stands at 1,400 crore. Now, GOCL promoter holding to rise from 67% to 75% after this. BL Kashyap also in focus on the back of order win. The company secured an order worth 1,616 from Satwa CKC Private Limited. And lastly, we are looking out for Geojit Financial Services as well on the back of the block deal. BNP Paribas SA has sold nearly 14.7% stake in the company. And the promoter holding of the BNP Paribas as of September 25 stands at 22.1%. Bajaj Allianz Life Insurance has bought on the hindsight 1.3 crore shares at 38 per share. So overall, we are looking for all these stocks in today's trading session.
If you say we must look, Upasana, thanks a lot for joining in and filling us in with that complete list. Well, that's a good time then to do a quick recap of all the stocks we just covered. The ones with positive news flow: Britannia, Delivery, Zydus Life, Kim's, Synnors Pharma, HCL Tech, Intellect Design, GOCL Corp, as well as Geojit Financial. All of them will be reacting to positive news flow, while the one that will be reacting to negative news flow is Zota Healthcare as well. Okay, all right. Well, let's focus on the commodities market then. Manisha Gupta joins in to tell us about exactly that. Hey, Manisha, good morning. Well, commodities always an interesting space, and I think the Bitcoin as well grabbed your attention for the last few hours. What a sharp decline we saw out there.
Oh, well, yeah, absolutely. Bitcoin is another story. Actually, it's a story of two halves in the year. The first half has been such strong gains and such friendly numbers and framework coming in from the U.S. markets, but the second half has been totally different, and sharp declines is what we are looking at. 90,000 also giving away in sense of Bitcoin in the Asian markets right now. But the other thing in commodities, which also seems to be giving away, is the crude oil prices. A third straight year of decline, and now we are trading at the lowest level since 2021. Well, there is an expectation of supply glut, optimism also over potential Ukraine peace deal, and not just OPEC Plus, which is increasing their production, but non-OPEC countries like Canada, US also seem to be increasing production. And then you have the weak China economic data. All of that weighing onto the crude oil prices, which is down by 19% so far into 2025. But where everything else seems to be gaining higher. So when you look at the gold prices, we are not too far away from its all-time highs, trading above $4,300 an ounce. Silver is surged up back above $63 an ounce. It's up by 121% in this year. You have copper prices trading at around 4-month highs as well, short covering there and position rollovers ahead of the contract expiry. Aluminum not too far away from its 2022 highs. Zinc is trading at around 6-month highs as well. So as far as the metals as a space goes, precious and base metals, all of that seems to be trading firm.
Okay, all right, got that. Thank you very much, Manisha, for all of the details. We do need to take a quick break on that note. Come back on the other side. We'll have Dharmesh Kant of Chola Securities joining in. We'll discuss a couple of fundamental stock ideas.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, let's welcome Dharmesh Kant, Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Good to speak to you this morning. Dharmesh, what are you making of all the news flow we're getting on these tech names? You know, in the last 3 months or so, IT has actually started outperforming, though year to date it's a big underperformer. From that space, what do you like?
Yeah, good morning, Nigel. I mean, yeah, most of the news flow is only a hope in nature that things should pan out. And the entire IT trade, if you look at last 2 years, the talk was always that interest rate cut will lead to discretionary spending. We have already seen 175 basis point interest rate cut in US, and still, most of the IT companies are not very, confident about giving a upward guidance or revising the guidance. So this quarter will be very critical from that point of view. How they are looking at, AI as a product rather than, it's in the making stage. So that has to be seen. And currency tailwind is definitely playing out in favor of IT companies. I think as a trading opportunity, there's definitely merits attention out there. And from the large cap, we are liking Infosys and TCS. From the mid and small cap, Persistent and Coforge have delivered consistently good numbers for last 2-3 quarters. We continue holding them. And there has been a new one in the staple, that is Orient Pro Solution Limited, which we have discussed earlier as well. So that's a fundamental buy, and one-year target is around 1,600 rupees. And we are seeing traction happening in the banking suite. Data center stack is likely to pick up going forward in mobility space. So expecting a few orders in coming quarters to come by in that company as well. So overall, you have to be very selective about the space. But yes, with the currency tailwind into a play, trading budges around, and I think one should be biased out there.
The stock that Dharmesh was talking about was Orient Pro. Yeah, that's the one, which I think around the time of Diwali is when Dharmesh essentially, I think, initiated coverage, and of course has been positive on it for a while. So 11:30 or so is where Orient Pro is at. Dharmesh, coming to you in just a bit, but we want to address some of the brokerage calls as well. And Gaurav is with us today, and banks are in focus. Gaurav, take it away.
Well, as Citi met the management of multiple banks, and first let's talk about HDFC Bank. During the management meet, what they have highlighted is that they are actually efficiently managing the cost of funds through borrowing, refinancing and TD repricing, which is term deposit repricing. Apart from that, banks said that over the medium term, deposit growth is expected to be higher than the credit growth. Now, this is actually important given that the CDA ratio was high for HDFC Bank. They have also reiterated that in FY26, they will be growing in line with the system in terms of credit growth, and in FY27, we will see bank outpacing the system. And lastly, they have also highlighted that the acquisition of new customers is something which is helping their deposit growth. When it comes to ICICI Bank, what the management of ICICI Bank is highlighting is that Q2 saw a bit of a slowdown in credit growth because they saw corporate growth which was tempered by accelerated PSU loan repayment. But from here on, the management seems to be confident on capturing market share in a profitable way. Apart from that, they believe that the net interest margins are going to be range bound. We will see some kind of slippage increase in third quarter because of the agri loans, and we will also see some kind of repo rate cut impact in fourth quarter. MSME and other businesses, they do not see any kind of stress rising there. And lastly, what Citi has highlighted that the clarity on the appointment of MD and CEO is a key thing to watch out for when it comes to ICICI. Lastly, when we look at Axis Bank, the management said that the corporate segment is actually gaining some kind of traction. Retail is also being a little healthy. They do not see any kind of stress in cards. In fact, they are seeing stabilization in the personal loan segment and no visible stress in the MSME segment, which is export oriented. Apart from that, they believe that the slippages are going to be a bit higher in third quarter, again because of the agri segment, and they have also revised their net interest margin guidance. Now they believe that the net interest margins will improve from fourth quarter or first quarter of FY26. Remember, this is because of the rate cut that we saw in the December meeting. Lastly, what Citi is saying that the optimization of the fee to asset ratio is presently constrained. So definitely watching out on all these banks and how they perform in a trade today.
Okay, all right. Dharmesh, thanks very much, Gaurav, for that. Dharmesh, wanted your view on some of these banks, but before that, I believe it's your birthday. So happy birthday from all of us.
So thank you so much, Prashant, Nigel. I mean, it makes my day.
Well, what makes your day, Dharmesh? Happy birthday. Wishing you well. All the very best. We were talking about some delivery and all. We won't let you do that. We'll come across. Prashant, me, Surbhi will do a cheers to a drink, Dharmesh, but wishing you well. Thanks.
Dharmesh, and let me take a moment of gratitude as well. It's great to always have you with us on the shows because you bring so much of clarity. You give so much of specific stock advice, which would be useful to many, many viewers. So cheers to that. Cheers. Have a fantastic day.
Should I ask him, Dharmesh, if you don't mind me asking, what's the number? Forget it.
As long as ever. As Prashant asked that, I think Dharmesh wanted to do the Durandar entry,
Okay. So enjoy your day, and I guess celebrations later. Dharmesh, just a quick view on banks. I think you have a view on some of the smaller private sector banks. I'm not sure if the list that Gaurav mentioned is on your radar, but just a quick view.
Yeah, Prashant, I mean, we have been constructive on the banking space and the private sector bank. We have been more constructive on Axis Bank. The reason being the last quarter numbers were quite good, and I think they have come out of the retail problem, the personal loan credit card segment, and the microfinance problem which they were having. And last quarter, they delivered 11% kind of a growth on the credit side. And I think going forward, retail and the SME segment and microfinance should pick up from there. As far as asset quality and NIMS is concerned, there's a general problem with the entire space, so that should augur well. IndusInd Bank is what we have been liking of late. I think the problems in the IndusInd banking space is done with new management into place. Things are likely to turn around from here, and it's available very cheap. So these are the two banks which we are liking from the private sector banking space, and from the public sector banking space, Bank of India has been a pick from 107-8 levels. And we think that going forward, around 10-15% gains are likely there in the near term. So 155 is the price target we have been guiding with, slated for revision post Q4 earnings.
Okay, all right, Dharmesh, stay with us. Got that view from you. We'll take a quick commercial break here, continue the conversation with Dharmesh. But before we do that, here is, veteran diplomat Shashi Tharoor. And this is part of a conversation that my colleague Parikshit had in Delhi yesterday. And his views on US-India trade deal negotiations and what could we look forward to. Just want to play out a soundbite. Mr. Tharoor, of course, is in no way involved in any of the negotiations, but I mean, he's someone that I guess he's widely looked to for these kind of things. So just wanted to play that soundbite out, take a break, and we'll come back with Dharmesh with more questions.
On multiple occasions, some people say 3 times, some people say 5 times, the two delegations have actually come to an agreement, and it's been rejected at the White House. So ultimately what Mr. Trump wants, only Mr. Trump knows. And I think, there will certainly be some red lines on our side where we cannot oblige them. And in a democracy, politics is an important factor. The farm interests of our farmers are not a negligible factor. 67% of our population still lives off the land. You can't put them in a position where, for example, they're swamped by wheat imports from America, to give you an example. There are some areas in which perhaps we could show some greater flexibility. We need to. There are many markets we could have done more to develop, that our private sector could have done more to develop. We could be selling very much more in Africa, parts of Southeast Asia, certainly in Central Asia than we've been doing. Europe, now we have an FTA, though people have overlooked the fact that it still has to be ratified by 27 countries. That could take a year. So we don't actually have it in force yet. We've concluded the deal, but it does have to be ratified, and then we're going to end up with I think, a significant impact on Europe. And all of these things are indispensable equally, as you said, strengthening our domestic system, both in terms of our own regulatory environment, the way in which our companies have been perhaps in some areas somewhat complacent. They've got to get their act together. We've got to be more robust.
Okay, welcome back. There's 13 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers from yesterday and the kind of action we saw on some of these names. Hormuz, good morning.
Good morning, Prashant. And the good part for the bulls, at least in yesterday's session, was that the advanced decline was firmly in their favor. A lot of the movers in the small cap space were beaten down names. Look at Praj Industries, the biggest single day gain since November of 24. The volumes were the highest in well over 6 years for Praj. 2 crore shares were traded yesterday. The 20-day average of just around 6.5 lakh shares. But out of those 2 crore shares, only 15.5 lakh shares were marked for delivery. And the 20-day average here is less than 3 lakh shares. And why I mean beaten down, stock is down 60% this year, turning out to be the worst calendar year that it has had since 2008. Now, Reflex Industries, it saw a intraday recovery of almost 40% from the lows in yesterday's session. The stock ended around 18% higher after being down almost 20% in the pre-open trade. The stock has regained almost all that it lost last Friday. Now, Monday's volumes were the highest on record with over 4 crore shares traded, the 20-day average of just around 21.5 lakh shares. Out of those 4 crore shares, 33 lakh shares were marked for delivery, 20-day average of around 3 lakh shares. And Monday's turnover was around 60% of its free float market cap. Jai Balaji Industries was one such mover as well, snapped a 3-day losing streak. It was only the third day of gains that the stock has had in the month of December. Close to 2 crore shares traded here as well, the 20-day average of around 18 lakh shares. And out of those 2 crore shares, close to 30 lakh shares were marked for delivery, the 20-day average of 9.5 lakh shares. And this stock too is down around 65% from its 52-week high levels. And lastly, a word on the new listings. Corona Remedies had a good trading debut. Shares worth close to 2,000 crore were traded on the stock. Wakefit had a bit of a quiet debut, ended below its IPO price. And here too, shares worth almost 950 crore were traded.
Okay, all right. Thanks a lot, Hormuz, for joining in and filling us in with that. But we can't let you go so far, right? Tell us what the brokerage calls you have for us.
Some interesting brokerage commentary that has come in, Nigel. The first one being Morgan Stanley's note on Bharti Airtel. Maintain their overweight stance, but they have raised their price target to 24.35 from 2035 earlier. The revised target is a potential upside of around 18% from Monday's close. Now, what they're saying is that they see multiple levers for ARPU to grow in mid-single digits over the medium term, and that in turn will facilitate the India business's EBITDA to grow in double digits during the same time frame. And they expect a tariff hike to take place in the first quarter of FY27, but the stock should start reflecting that in the upcoming months, is what Morgan Stanley has said. And an initiation coming in on Arvind Fashions from Motilal Oswal. It's a buy recommendation, the price target of around 725, implying a 46% upside from current levels. They say that it has evolved into a lifestyle category, almost 15% revenue coming from adjacent categories. Their shift to a consignment-led model has improved pricing control and margins, and their asset-light structure is driving a faster scale-up and a strong cash generation as well for the company. Now, over FY26 to 28, they are expecting their revenue, EBITDA and PAT to grow at a CAGR of 13%, 25% and 32% respectively over that time frame. And on the bull case scenario, they are saying that the price target goes up to 1,065, which implies a 114% upside from current levels. The EBITDA margin improves to 16.5% from the 15% that they have projected in the base case. And the strong brand mix and high full price sales will drive a 14% revenue CAGR compared to a 13% CAGR in the base case. So keep an eye out on Arvind Fashions.
Okay, interesting names there. Bharti, of course, I guess, huge wealth creator over the last couple of years. And Arvind Fashions is the other one. One from Morgan, the other one, of course, from Motilal Oswal. Thanks very much, Hormuz, for those. Dharmesh, I mean, any thoughts on either of the two names, Bharti or Arvind?
Yeah, I mean, Bharti Airtel, we have been constructive on so for quite some time. I think the valuations are now, priced to perfection. But you have such a limited play in the space that even if you're holding it, 15-16% kind of a compound is likely to be there. But the best way to play that, I mean, the entire space, the telecom space, to my mind, is still Reliance Industries because of its eventually when the Jio platform, have carves out, so the valuations, there's a 15-20% discount out there compared to the Bharti Airtel. So SOTP based, we are very bullish on Reliance Industries from a long-term perspective. To my mind, in the next 3 years time frame, around 70 to 80% kind of a gain should be there. Taking into account the retail division business, the Jio platform division business, and the new energy will start trickling in from FY27. So these are the, plays out there. But Arvind Fashions, I have not tracked for quite some time, so difficult to comment on that.
By the way, there was one more brokerage call, Arvind Fashions reminds me. There was one more broker this morning that's sounding very optimistic on Avenue Supermart, talking about how free cash flow will only improve from here on, as a lot of the newer stores start maturing. I'll just get to the details of that call as well. But would you look at this, Dharmesh? If you want to buy a retail/consumption stock, there's Avenue Supermart, there is Trent. I mean, Trent is a very different story altogether. I mean, we know this year was the year of undoing of Trent, so to speak. But now at these lower levels, does it make any sense?
Yes, so the problem with all these companies is not the business model. The business model is doing well, and after the supernormal run of the initial years, they have returned back to the normal growth trajectory, which is likely the case with any businesses going forward. So I think from here on, getting 15 to 20% kind of a run rate for next 2-3 years would be a challenge for them. And the competition is also hitting up across the segment, be commerce or same store sales growth or the new stores. So but that's a challenge out there. The only point why people were invested in these companies in the initial years was the super growth trajectory which these companies were offering at that point of time. Now that has been done away with. So even now, if you look at the valuation multiple of say trend after 50% correction from the top line or revenue supermarts, which has never crossed 2021 levels, is still valued around 50 to 16 times P multiple 2 year forward. So, but that's the problem with these companies. I think trading pace can still be there, but fundamentally wealth creation kind of a play from here on, to my mind, it's difficult to come through in these companies.
This was CLSA, by the way. I'm just looking at the call again for the benefit of our viewers. And they have a big price target on Avenue Supermart. They say it's a high conviction outperform call. Target price of 6,300. That's a big one. So we'll keep this stock in mind as well. Let's see if the market is willing to side with CLSA's opinion that free cash flow is going to improve as the stores start maturing. Got that. Dharmesh, thanks very much. We need to take a quick break. Come back on the other side. We'll have the pre-opening rates. Also, Karan Torani of Elara Capital will join in to talk about what's behind the surge in the PVR stock. Welcome back. Well, we still have a couple of minutes to go before we get pre-open rates and, of course, the actual market opening. The indication is it's going to be a cautious start. The big question is that just like yesterday, will bulls come in to buy the dip and defend the lower level? It's been a very range-bound market, and perhaps we'll have more of that. Right now, it's about a 90-point dip that we are getting. Our technical experts are with us, Sudarshan Sakhani and Mitesh Thakkar. So let's ask them what is the best way forward. Gentlemen, morning. Mitesh, let me come to you first. So if you get another 90-point gap down, what would you do?
Morning, Survi. To be very honest, I think, the index hasn't been a very rewarding instrument because it's basically consolidating between 25,750, 800 to about 26, 200, 300. So I think, if you get a 90-point cut, it's still in the middle of the range. But in case the decline intensifies, we, test about 25, 800, 825 zones again. I think that's the time when you would want to look at long opportunities because that's where the support comes in. And then around the upper end of the range, you would want to take some profits and exit.
Okay, got that. Sudarshan, let me come to you. What is the approach? Any trades, Nifty, Bank Nifty?
Yeah, good morning. See, the level that is being defended by the bulls is 25,900 approximately. So if the Nifty were to slide below this level today, a short trade would open up because then that defense has failed, at least for the time being. If you get that level, if you see a slide below 25,900, professional traders can go short in the Nifty, keep a tight 70-point stop loss, and then take profits at around the level which Mitesh was talking about, 25,800. So it's a short-term trade, but the only trade today is on the short side.
Okay, all right. Let's get to individual stocks then. Sudarshan, you go first.
Well, it's a mix. The market is doing nothing. Chambal Fertilizer is a buy with a stop under 430. Muthoot Finance is a buying opportunity with a stop under 37.80. I have two intraday shorts, DLF, where you can consider an intraday short with a stop above 705, and IRCTC, which has a miserable chart, intraday short with a stop above 679.
Okay, all right. Let's come to Mitesh as well. Mitesh, what about stocks for today? What ideas?
A mix of buys and sells today. I have a buy on UPL with a stop at 753 for targets of 790. On the FMCG charts, good breakouts have taken place. In fact, I like a lot of stocks from the sector, but what I've chosen today is Godrej Consumer. Keep a stop at 1149, look for targets of 1200. And on the selling side is LIC India with a stop at 871. Look for targets of around 825. And KPIT Tech is a conditional sell if it breaks 1200. It's closed at about 1207. So below 1200, sell with a stop at 1221 for targets of 1160.
Okay. All right. By the way, in the next couple of minutes, we'll have Karan Torani of Elara joining in, and we'll be discussing PVR and trends there in more detail. Before that, let's just pull up PVR. I mean, the 1 year, this has not been anything great for the stock. It's been very, very range bound. It's down about 25% in the last 1 year. Today it's up a little bit. And the last flutter of excitement, last 2-3 days, is because of the phenomenal box office collections of Dhurandhar, which I think at last count had already crossed 300 crores.
351 crores as of the weekend. This is the third film that's managed to hit 300 crores in this year. Sayara, Chava, and Dhurandhar. So it's been good going for the box office. A bit of a comeback to the theatres to watch the movies. Very quickly, let's ask our technical experts if there's any, technically, if anything is shifting here. Mitesh, PVR Inox, any interest?
PVR yesterday had, obviously, because of some kind of positive news flow, it's had a very strong price action, though it kind of tapered off towards the end of the session. But I think if it starts closing above 11:30, then I think, you would see a sustained rally beyond 1200.
Okay, all right, got it. Gentlemen, thanks very much. We'll come back to you a little closer to market opening, then we'll get some more ideas. But
9:10 call, Sudarshan, morning. What do you have?
It's Chambal Fertilizers. Buy Chambal with a stop under 430.
Chambal from Sudarshan. And Mitesh, what about you?
I'll go with a buy on Godrej Consumer for targets of 1200.
Okay, Godrej Consumer from Mitesh. Okay, well, that's essentially what we are watching out for with regards to specific trades. 2 minutes now and counting down. Britannia is what we want to shine the spotlight on. Mangalam is here with details on this one. Mangalam, over to you.
Well, we have Subhashish Basu, who is the ex-CEO of Anik Dairy, who's joined in as the CEO of dairy business for Britannia, a business that accounts for less than about a tenth of their company's overall revenue, but they are looking at growing this business earlier as well. The current head of dairy, Abhishek Sinha, has been elevated as the Chief Transformation Officer. All of this may perhaps be a part of the new management's strategy going forward, where Rakshit Hargave from Birla Opus has taken over as MD and CEO with effect from yesterday itself.
Okay, all right. That's Britannia, which is in focus. Just a quick, look at stocks which we've put out since the morning. So Britannia, of course, with Mangalam there, 1/3% higher. Delivery will come up on your screen. Zydus Life is another one, which should come up. Kim's, Sonoris Pharma. There is HCL Tech, which we should look at. Intellect Design. There's Geojit Financial. Geojit had a big move yesterday. Was, I think up about 15% with large volumes. Zota Healthcare is of course, doing a QIP. Zota, of course, has been a multi-bagger in a short time span, 3-4 years or so. It's gone up a few times. So that's the list of stocks. Smaller names, really. IIFL Finance is another one where I think there is an upgrade. And I think from S&P, stocks actually flat. And I'm seeing the stock at the bottom of the screen, BL Kashyap. I've been seeing that since the morning. There's a large order. And I think for BL as well, there is a ratings upgrade from CRISIL. And stocks up about 8% or so. So 57 now on that one. Just a couple of seconds. First rates anytime now. And we will have the opening level. So 25,966 is where the Nifty is starting, about 1/4% lower. The Nifty Bank is down about 1/3%. 59,200, 59,300. The small cap index is down about 1/3%. The mid cap index is down about 1/4%. And that's the overall picture. So, it's slightly lower, slightly sideways. Something similar, actually. We all yesterday as well opened about 1/3% lower, and by close we pulled back and ended absolutely flat. So let's see if we'll see something similar today as well. And lots of stocks opening up. Nifty heat map in terms of how the 50 stocks are starting. Quick sense, and then we'll move on. So you got about 45 odd names which are lower, and a few which are higher. Bharti, which we've been highlighting in terms of brokerage calls at Morgan Note, etc., starting strong. There is Indigo and Apollo Hospitals. And on the other end, there's Eternal, Axis Bank, and Shriram Finance, which are coming up right now. So that's the Nifty heat map. It's about almost 100 points lower on the Nifty with about 30 seconds in. Surabhi.
Okay, by the way, the stock that we were just discussing with Karan, Meesho is off to the races. 4.5% up on Meesho. But at the same time, look at Eternal and Swiggy. Both these stocks have started lower. Eternal quite decisively so, down about 2.5% as the day opens up. So watch for some of these quick commerce / food delivery players. On the downside, what do we have? On the Nifty, Axis Bank, Infosys, there's M&M on the way down, there's Geo Financial, there is Hindalco, across the board really. HCL Tech is also weak. IT is definitely weak. TCS is weak. That's what we have. Let's see what the bigger banks are doing. We had that big city call on a lot of the frontline banks. Check ICICI Bank. It's down about 0.25% right now. Check HDFC Bank. Also down about 0.25%. So banks are down, but not fully out. The weakness for the Nifty is largely because of IT and a clutch of other consumer stocks. There's also Titan, which is on the lower side of the screen. Nestle is about 0.5% lower. Reliance itself is 0.5% lower, dragging things down this morning. Let's see what's happening on the other end of the screen. Bharti Airtel, thanks to positive brokerage commentary this morning, up 1%. There's some buying on Apollo Hospitals, up about 0.3%, but that's it. By the way, beyond these two stocks, there's hardly any other Nifty gainer worth counting right now. It's an overall, down, gap down, full across the board profit-taking kind of a session. 100 lower on the Nifty. Nigel.
Well, that's right. A few stocks that are coming up on the radar with regard to top volumes. You have Transformers and Rectifiers. The stock is down close to 3%. One of the top volume losers on the downside. Hindustan Copper as well as seeing some profit-taking. That's down close to around 2.5%, as is the case with Hindustan Zinc. Remember, metals have had a big run. You'll have to say this is profit-taking, not a change of trend, at least as of now. In terms of other stocks that are doing well, Misho. Just take a look at that stock, up 5.5%, and late in trade yesterday, I observed that the stock in the final hour of trade went up close to around 4.5%. So put yesterday's last hour of trade and today's first few minutes of trade, the stock has actually gained close to around 10%. What else is doing well? You have BL Kashyap as well as Atlanta. Both of them had some positive news flow. So both of them, in fact, up in today's trading session, 4 to around 5%. I think Atlanta as well should come up for you on the screen. Corona Remedies, yesterday it's a big run. You're on listing day. Today it's come for some mild profit taking, I think so, or at least for starters. But that's another stock that's on the radar. So net, it's a negative start, but the Nifty has moved closer to around the 25,900 odd mark. And the last few trading sessions, dips have got bought into around this 25,900 odd mark. So let's see how it goes. Prashant.
Well, I think, 90 points lower, 92 points lower, settling down is where we are at this point in time. So that's the market for you. Let's, we'll come back and look at some individual names, etc. in just a bit from now. Rajiv Batra is with us as head of Asia and co-head of Global Emerging Markets Equity Strategy at JP Morgan. Rajiv, good morning. Welcome back. I suspect this is the last conversation of the year, at least.
Morning, Prashant.
And then we will be 2026. So, a tough year, right, Rajiv? But I guess after a tough year, maybe comes a slightly easier year. Not easy or a great year, but maybe an easier year. You think that's the broader kind of view out there as well? You think that'll be the case?
That's a very good phrase. When things get tough get going, and that's what Indian equities is all about. In a tough year also, we still try to get to the new highest level over there and didn't give a big drawdowns. Yeah, relative term, we are underperformer, 25% relative to EM on a 12-month basis. But on absolute term, we still protected investor capital who still parked their money and stayed with India overall. Yeah, going into next year looks pretty exciting to us. The market is getting more worried about trade deals or the global AI environment. What keeps us excited is that policy is working at forefront, be it on the monetary term, fiscal term, and most exciting is on the regulatory easing front. We are also seeing discussions on FDI, be it in insurance and nuclear sector. So all this is coming as a music to the ears of long-term investors, who exactly want India to work on policies, reforms, and regulatory easing. And that's what India policymakers are rightly addressing at this juncture.
How is this rupee weakness playing out? You can look at it. I mean, if you buy now, you're buying at a better level. But I mean, if it continues to slide, then you are at a loss. You lose if you put in money. So I mean, is there a level of anxiety there among foreign investors?
Obviously, there is some loss of confidence, and we can see in terms of flows also, net outflows from India equities, India debt market. Month to date is close to $1.6 billion. That shows up in form of profit booking in some of the trade ideas also from investors. Again, I will say one environment is not conducive for a risk-on trade. We can see what's happening in the dollar environment. People are nervous this week because we have 11th central bank meeting, data points coming from US, job CPI, then China. And this is the reason why it's a risk-off environment, and that's where rupee is reacting. But beyond that, I will say rupee depreciation is inevitable and desirable too, taking into account the macro environment where you not only need to offset the differentials on US tariff, but also needs to make Chinese imports expensive. To discourage importers importing from China. So I do believe it's a calibrated move to depreciate rupee to keep economic growth going and not hurting your exporter in this environment. Beyond that, I will say we should not worry much about economic effect because inflation is already low. External debt levels are also low. So the only hurt which is there is on the equity investor confidence at this juncture.
And that's a big question, Rajiv, isn't it? Good morning. Great to have you in and wish you season's greetings. And I was exactly coming to that, this foreign investor confidence, right? And it's fine. Domestic flows have been so resilient that we've managed to hold the market on our own, which is a huge achievement. But we also realize that foreign participation is important if this market is to get its mojo back. Now, looking at the data out of your report, I think you folks are expecting 13% earnings growth in 2026 calendar year and 14% in 2027 calendar year. Now, will 13 to 14% earnings growth, along with a depreciating currency and the tax that we have here in India, will it still be enough to get the foreigners back when they're getting attractive bargains in deep tech, AI, etc. in the rest of the Asian region?
Thanks, Surbi, for having me, and happy holidays for coming weeks also to you.
Thank you.
Again, I the base case does not take into account a massive rupee depreciation, which has just started overall, but a much more calibrated one, which keeps you in the range of around 81, 89 to 91 or max 92 over there. That is still welcome because it also gives entry point to the new investors also who think that this is the right level. If you are right at the trough in terms of an INR and you get a good entry point per se. But any depreciation beyond that, will be definitely become a huge amount of a concern pertaining to investors who have been long into India, maybe for not just decade, but 2 or 3. But if it's purely coming to the growth perspective, saying that rupee remain at a current juncture, and despite that you get 13% earning growth, it will still be higher than what you are getting in AI part of the world. Remember, AI still is a hope trade. It has not translated into revenue so far. Like altogether, globally, if you look at the AI revenue, it's only $50 billion on a lot of capex that is being done. Earning growth is very different story. That's where if doubts start arising on AI trade, on earning growth term, that's where India emerges as a safer haven, which is still offering you a 12 to 13 weeks, or you can say anemic from our own history side, but quite decent and good compared to an environment what other countries or region are. And it's also important to remember, again, entry point over here. India is not trading at now 100% premium to emerging market. We are trading at a 50% premium only. So valuation gap has narrowed. And when you start your book at the start of the year, you have a brave decisions to make. The brave decision is, will you buy the markets and the play which are already up 80, 90% last year, or you will look into the market that is giving you some value and a hope of a growth coming back. And that's where India fits the bill right now when you enter into next year as one of the big 4 emerging markets.
Hi, Rajiv. Good morning. Good to hear your thoughts as always. You're sounding a little bit more optimistic on 2026 from the time we last spoke. So that's heartening to hear because otherwise our portfolios haven't done much just in the near term. Talking about AI, I have a 2-part question. One is on the global AI trade. Do you think that's peaking out? I wouldn't go as far to talk about, term it as a bubble. But do you think that's some signs of it peaking out? And you'll still continue with your underweight stance on tech, I think so. And that index actually is showing signs of coming to life. However, growth is still going to be very, very tepid. So how you're placed out there? Global AI, and Indian tech?
Yeah. So in terms of an AI at an Asia level, we are neutral on that particular theme. We are no longer overweight on that theme, and that means we are even neutral to marginal underweight on Taiwan, which is heart of that particular theme. Our bigger concern is we think right now AI lacks moat. That's a key thing. Like, is it your AGI or it is your commodity, like your electricity? If it is a commodities, then definitely it will be more difficult to monetize. And that brings me to the next point, monetization. If you take all revenue, circular, direct subscription into account, there is only $50 billion revenue to support, on which there could be $650 billion capex next year and could be $5 trillion capex in the matter of next 5 to 6 years over there. But if revenue is not coming, monetizations is not coming, then the value does not lie on the AI generator side. The value lies on the use case side. So that's where our concern is, when adoption will come at a faster pace, how it will monetize. So that keeps us on the sideline, and you can say neutral on overall Asia IT sector, and even underweight on India IT. Coming to India IT, our bigger concern is, like, even though they are now started rebounding from September level, good 13-14% odd up, but year to date it is still down 15%, and the bigger concern still lies that valuations are not that dirt cheap enough to even become a neutral kind of a case. Coming back to the growth, 12-month perspective, trailing terms, which is in the bag, it's still very anemic, 2 to 4% only. So that makes the whole IT sector PEG ratio quite uninvestable. You need close to around 10 to 12% kind of an earning growth. That makes a PEG ratio less than 2 for Indian IT. And that will bring the case back for the Indian IT sector. For now, it's too early, according to us, to considering all the AI-related disruptions, valuation expensive, and consensus still not significantly underweight yet. That keeps us at a bay on India IT sector.
Okay, that's India IT. So Rajiv, then leave us with your best themes here in India. You're clearly very optimistic on the market, and it's good to hear that. We've been through a rough patch. But as you expect the market to revive, earnings to revive, foreign participation to revive, what would be your, say, top 2 or 3 themes here in India?
Definitely, number one, domestic demand. That's the theme we need to go in because we have a tailwinds of policy easing. More is yet to come. 4 state elections, so social welfareism will continue on that path. Premiumization has been in a play. So I will stick with the domestic demand. And in domestic demand, I will say financializations of saving, premiumization, capex transition from older capex to the newer one, that is your EMS, robotics, defense. That's the one important to watch. And how we are playing at a sectoral term, materials, financials, and consumer discretionary. So these are the 3 ways we are playing it. And yes, not just India, global equities going into next year, JP Morgan is very bullish.
All right, Rajiv, what about on consumption? That's been a theme you're like, right? Discretionary is still over staples, or, if you're allocating fresh money, what would the proportion be in discretionary and staples, which have actually been rank underperformers? And some of those companies are very high quality companies.
Yeah. So in terms of a discretionary investor, rather than making a broad jig sector call, we will say we are overweight on both discretionary and staples. But within staple, the preference is for food and beverage over HPC. And in case of a discretionary, the focus is more on auto, your QCs, retailer. These are the buckets which we like.
Yeah, no, absolutely. By the way, I just want to make a quick mention that market breadth is now, it may be a little early still to look at market breadth and things start to settle, but 15 minutes in, right? It's 2:1 in favor of declines right now. So 1,700 stocks lower and about 850 stocks are higher. And Eternal and Swiggy are down 3% and 2% respectively. We had a discussion with the Bernstein analyst, and the question is whether, there is a bit of a war brewing in terms of who's going to outspend to kind of regain, especially from a Swiggy perspective, to try and regain market share. So in that sense, everybody's sitting on a lot of cash. Some raised recently, some raised earlier. BSE is down 2%. BSE, by the way, is the number 3 volume-led loser right now. And by the way, this comes after yesterday's sharp cut as well. BSE was down about 3% yesterday. So that's about 5% in 2 days. High on Friday was 2750. and it's come down to under 2,600 now. So that is Bombay Stock Exchange. Axis Bank is down, full 2.5% this morning, 1253. There is Transformers and Rectifiers had a very sharp move from 240 levels to about 300, 315 in 2 days. It's giving back some. And so it goes GMDC, BHEL, Capillary, which is a recent listing, Corona, which listed yesterday, which is a formulations pharma company, is down about 2%, had a very good 30% kind of pop on listing day. So yeah, I mean, it's, a lot happening, but it's more down than up. And of course, I guess you guys pointed out Meesho, right?
Meesho is the only one.
Meesho is up
defying
9%.
gravity. Yeah.
And we had a quick view coming in from Karan this morning. So Meesho is 185, 186 right now, and on humongous volumes right now, mind you. And by the way, number 2 volume-led gainer is Shakti Pumps, which is, definitely displaying some Shakti because it's come up from, 550 levels 4 days back to about 780. So had a painful, almost 50% decline from the highs, and is now coming back on the back of some orders, etc. they've got recently. Wakefit is another one, which is up 3.5%. So that's Wakefit, recent listing. Yesterday's listing, by the way, Wakefit. And Iron Exchange is up 8%. Iron Exchange also, by the way, the recent low was 330. It's moved up 100 rupees in a few trading sessions. So that is, some of what we are seeing out there at this point in time. I think we had Chambal Fertilizer, as Mitesh has called. Chambal is up about 2.5%, 3%. Actually, all these fertilizer companies, right? Look at Chambal, look at Paradeep, and Paradeep, of course, non-urea. Fact, that is fertilizer, Travancore, 6%, and a bunch more on the fertilizer side, which are doing very well.
By the way, just pointing out, Axis Bank is seeing some very decisive selling this morning. Yeah, it's down about 3% right now. And the selling on the others, while Meesho is rising, going to the skies, the others, Swiggy and Zomato, continue to be under
and
pressure.
Just one more stock, BSE. Yesterday the stock was under pressure, and today
5%
as well,
in 2 days.
Yeah, it's and currently it's at the low point of the day as well. I don't know whether the street is sniffing something, but a stock that was 3,000 rupees just a few days ago, that's come down to around 2,600. We'll keep an eye on it.
The 60.
This is a SEBI meet, right?
Yeah, I think it's on 18th. I think there's a SEBI meeting. A board meeting, and some chatter that we reported, by the way, that SEBI is essentially looking at exploring, sort of defining eligibility criteria to access F&O markets. So, will this board meeting take it up? Will there be a discussion paper? We don't know, but I can't think of anything else on the back of which BSE is correcting, unless there is something else. But there you go, 2,600 on BSE. Arvind Fashions is what we want to focus on. Rajiv, by the way, if you're still there, thank you very much for joining us. Good speaking with you. Wishing you a fantastic 2025 and New Year, and see you in the new one. Thank you.
Thanks, Prashant. Same to you.
Okay, Arvind Fashions, right? Buzzing. Motilal has initiated coverage. Vinny's here with more details. Vinny, over to you.
Hi, good morning. So yes, they've initiated coverage on this one with a buy rating, target price of 725 rupees per share, which implies a 46% upside, right? Now, in terms of the view, why are they positive? Overall, they believe Arvind Fashion is one of those companies, they've moved in to that lifestyle category, 15% revenue growth that one has seen, adjacent categories, from this adjacent categories, which have seen such a good growth coming in. Also, the company has shifted to more of a consignment-led model, which has led to improved price controls. Margins have started improving as well because of this change that has come in to the consignment-led model. Other than that, asset-light model is what they're following in terms of structure, which is driving up faster scale-up for the company, stronger cash generation as well. And overall, Motilal is expecting in terms of CAGR growth over the next couple of years, FY26 to FY28, for revenue or CAGR growth of 13%, EBITDA growth, which is pre-Ind AS growth, is around 25%, and PAT growth at around 32%. Overall, the bull case scenario is even higher, right? When you look at it, they have given a target implying around 1,065, which is a 14% upside that one could watch out for. But yes, a good performance that the company has seen, 5 power brands which the company is focusing on, which they believe will lead the growth for the company going forward.
Okay, all right. Thanks a lot, Vinny, for joining in and giving us, that update. Clearly, the stock excited on the back of that note. But let's focus on Bharti Airtel. That's as well doing well in trade. Rima joins us to help us out with a brokerage note out there. Rima?
Thanks so much for that. So, Bharti Airtel has been a big outperformer. It's up 30% so far this year. In the last 3 years, there's been a rally of 150%. In the last 5 years, it's gained by more than 300%. And Morgan Stanley sees more upside in the stock. So they have an overweight rating and they've increased the target price to a number above 2,400. In the near term, they're saying they expect a tariff hike in Q1 FY27. They believe that will start reflecting in the stock price. But over the medium term, they do believe that ARPUs can compound in high single digits, which will result in an EBITDA growth of double digit. And return ratios should also start improving. And that is the thesis for Morgan Stanley's bullish call on Bharti Airtel. Back to you.
Okay, all right, got that. Rima, thank you very much for the details. Well, with that, let's move on to our next guest. And the company in focus is Narayana Health. The stock has surged more than 44% in 2025. So who's saying that this was a year of flat returns? Not really, if you're in the right kind of stocks. Well, what's the outlook going forward as we step into a brand new year? We have Sandhya J, Group CFO at Narayana Health, joining in, and we want to discuss three broad areas. Sandhya, morning. Let me just lay them out for our viewers. We want to understand the implications of price hikes, the ones that hospitals probably are taking or will take as the year starts off, the new year. Second, the CGHS price increase. Now, what has that meant for Narayana? And then what is the outlook with respect to the integrated healthcare business? So, Sandhya, let's start with the first one, the price hike. I mean, I remember from our earlier conversations, I think you always look at price hikes in January. And these are, fairly modest to say mostly. You try and keep it modest. I remember that from the old conversation. But how severe is medical inflation this time around? And how are you thinking about pricing as we step into 2026?
Good morning. Thank you for having me here. So as far as the pricing is concerned, again, we aspire to keep it very modest, given that there is definitely paying pressure both on the insurance side as well as on the cash side. So we are aspiring to keep it modest. The cost, of course, one impact which will significantly come is the wage impact, both because of the new labor code, there is some amount of cost impact that we are going to see, but also in terms of the regular inflation that we are seeing. The second big piece which is playing a material part for us is currency. The volatility that we are seeing in currency and therefore the impact it is having in terms of our capex spending is another part that is playing. On the positive side, of course, we are still continuing to get flow-through benefits from the investments we've made in technology. That's what has allowed us in the past and continues to allow us to keep our price increases moderate. And the other positive play which is playing in our favor is the more and more higher-end procedures that we are able to do. And that's also helping us a little bit on the pricing side.
Okay, so that's offsetting some of the pressures, got that. But when you say modest, how do you define modest? Is it in single digits? How should we read it?
Very low single digits.
Very low single digits. Okay, that'll be extremely helpful for your patients, I'm sure. But also tell us where conversations are with insurers, because there's been a lot of chatter in the recent past about insurers looking at not raising rates. Have there been any conversations that you've had? And, what's the outcome?
Insurance negotiations are for a period of time, and therefore continuously through the year, there would be some insurance which would be coming up for renewal. And every time we go for renewal conversations, like any other negotiation, there is a push and pull. The insurance organizations are also struggling with their cost structures, and therefore there is a lot of pressure that's coming. But what we have seen is that if we have a meaningful conversation, I think we've seen reasonableness at the end of insurance as well. And we also get very good support from hospital organizations like HPI, Nat Health. So where there is certain behaviors that we want to address, we do take help from them. But largely on a bilateral basis, we've been able to have meaningful conversations because our price hikes are not significant. Our regular SOCs are something that insurance are able to accept, of course, subject to some moderations which both parties have to accommodate.
Sandhya, morning. Just one thing. There's no communication from in terms of these price increases, etc. There's no intimation of the government or anything, right? Whether you can go ahead and maybe we reported that there was some deliberation going on, and the government was holding meetings with hospital companies. I think there were a couple of rounds with different sets of hospitals. Anything you can tell us?
So there is there are few conversations which have been more to bring a sense of balance between insurance and hospitals. I think in the last conversation, what we are given to understand is that the government has instructed both sides to be reasonable. From a hospital point of view, I think the cost of care has to come down, and that's something that we as Narayana also keep talking about. And from the insurance side, to be more reasonable in terms of deductions, in terms of paying for the right procedure, the right price. So at the moment, all the meetings that have been held with the government intervening as well have been trying to give balanced instructions to both sides to find a balance, because the most important thing is people need to have access to care. And with some of the stress that's going on, cashless are being disabled for people, and people are not able to avail care seamlessly. So that has to be addressed. So which is the intent of the government?
Yeah. We had reported, the last round that we reported was around the 13th of November is when we said, well, the second round happened. I don't know if something happened after that. But, after the first round of these meetings, what we had reported is that some hospitals had agreed to not take rate increases in 2026. When you say both sides to be reasonable, I understand. I mean, it's not a question so much for Narayana, but do you think we are moving towards increased scrutiny across the healthcare costs from a consumer perspective, which includes insurance and, of course, hospital charges as well?
The scrutiny is at one end, it is required also, because if there is an unreasonableness from the hospital end, we need to correct. But at the same time, whatever scrutiny is being taken by the insurance companies have to be fair. And we need to be reimbursed for the costs that we are incurring. One part which we always miss is that healthcare is a very expensive business proposition, and we've spoken about it multiple times on this call also, and so I don't want to list down. But it is a labor-intensive industry. For every patient that we serve, we have 5 people in the hospital doing some sort of a service to enable that patient avail that care. So that is the multiplier. And then infrastructure. There are no zoning laws in the country. So if you have to set up a hospital, you have to negotiate with commercial real estate. So there has to be an acknowledgement that there is a significant high cost involved in delivering healthcare. And if you look at it in comparison to any country in the West, the quality matches, but the cost is like 1/5 or 1/10 of the Western countries. So hospitals are doing something right. Now, finding that balance is important, but I don't think there will be a position that we will be able to completely do without price hikes, or we will be able to run without being fairly reimbursed for the work we do.
All right. Hi, good morning. Good to see you, Vin. Well, let's go overseas then, and let's talk about your international operations. Narayana Health, well, they acquired the UK-based Practice Plus Group hospitals. I think it was done at a little south of 200 million approximately. Is it on track to hit that 250 million pounds in FY25? And if you could give us a sense in terms of scaling up, how will it contribute on revenues, margins as well in the time to come?
So we're not giving any forward guidance, but what we've reported out, I think we are trending quite robustly in terms of revenue. Now, in terms of our future potential, at the moment we are assimilating. It's a fairly well-run organization. We've been able to retain the entire leadership as part of the acquisition. And therefore, we are enabling from a growth and cost point of view, but we are letting the management run the course of their plan, which itself is quite a robust plan. We are looking to improve margins. Mostly it will come from technology and more importantly, improving the payer mix. What we mean by improving the payer mix is that currently more than 90% of the revenue of PPG comes from NHS. NHS is a very positive book of business. They are good payers, which means pay on time, inflation adjusted, and provide long-term contracts. So that gives us a solid base. and we'll continue to capitalize on that base and continue to serve. But there is capacity available. So we are looking to utilize that capacity to be able to attract a private pay, which other private healthcare organizations have also been able to successfully do in the UK. So with the same capacity, as we are able to improve the payer mix, we should definitely see both revenue and margin growth.
Any indication of how much? I mean, your margins are almost touching 26% as of second quarter. As losses in that integrated business come down and your payer mix keeps improving, those high-end surgeries that you spoke of, around what vicinity are you likely to end the year, FY26?
So I don't want to give a guidance, but there are certain factors I want us to keep in mind. One is that now that we have acquired the UK business, so we will see dilution because of that, given that it is a lower profitable business, so you will have to adjust for that. The second is that because of the acquisition, there will be exceptional costs. We have incurred a lot of pre-deal costs, costs of diligence, costs of various costs. Some of the impact of that will be extraordinary items that will come into the P&L in the current quarter. Q3 is a poorer quarter relative to, you all know, you've been tracking us. Q1 and Q3 are cyclically weaker and Q2 and Q4 are cyclically better. So therefore, Q3 will have some cyclical weaknesses both on the revenue and the margin front. So when you see the Q3 numbers, all of this will play out. Q4 will be definitely very robust for India, the way we are seeing the outlook for Q3 and Q4 we've picked up quite a bit in India and we're continuing to do more. So we will see that positivity in India. Cayman will be more or less stable. UK will be continuing at the levels at which it is. So that's how our numbers will culminate for the year.
Okay. All right, Sandhya, we will leave it on that note. Thank you so much for joining in and wish you happy holidays. Wish you a very happy end to this year and a happier 2026 as well. Thank you so much for joining in. Well, we'll take a break on that note. On the other side, the management of Kaplan Point Labs joins in. They'll give us their outlook for 2026.
Well, as promised, let's focus on the next company, Kaplan Point. That's the stock in focus. It's down in this year, actually. Stock has struggled a little bit, but know that the company has plans for 15 project launches in FY27 and is eyeing new markets such as Mexico as well as Chile. To discuss this and more, we're joined by Mr. Vivek, the Chief Operating Officer at Kaplan Point Labs, who joins in. Hi, Vivek. Good morning. Good to see you in, as always. The year has been a little rough for a lot of mid-cap companies, but you're eyeing better plans for the next year. Let's focus on the top 3 points, though, that we're going to be talking to Vivek about: the US market outlook, acquisition roadmap for 2026, and expansion plans, GLP-1 drugs. That's going to be top of mind. Well, Vivek, let's start with the recent news flow then. The company's US arm, Kaplan Steroids, where it was granted final approval for Linezolid injection single dose. If you could tell us what is the potential of this particular approval and also what's in the pipeline for the coming year.
Yeah, so we've been getting approvals at a good speed recently. We've got about 2 or 3 ready-to-use bag products approved. And in the next 3 months, we're also expecting a couple of more niche and high-value products coming through. And the idea now is to make sure that we execute and launch them as close as possible. As you would have seen, US continues to grow very well for us, both in our B2B and our own label in the front end. And we need to make sure that these newer approvals maximize our earning potential in the quarters going forward.
Okay, got that. So if we look at some of the trends going forward in terms of more launches in the US, what's the pipeline looking like over the coming few quarters?
So we have already about 40 plus products approved in the US. If you look at our numbers compared to what we were about 4 or 5 years ago, you will know that our R&D and regulatory potential has been very well established. In fact, the market average for getting approvals for products is around 25 to 28 months, whereas our average is anywhere between 14 to 15 months. So we're doing well in that direction. We're also actively working on the inorganic route as well, acquiring ANDAs from outside. We've already done a few, and we're at late stage to acquire another 10 plus products, hopefully in the next quarter. So this should really augment our growth going forward. Next 18 to 24 months is going to be a very interesting period for us, not just for the US point of view, but also for Mexico, Chile, etc. But yes, I think US is growing at 25 to 35% on an average, of course, at a small base. But the important thing about this growth is it's a good quality growth, where the bottom line numbers is very comparable to the parent company, which is already at a fairly decent level at 34-35% when it comes to EBITDA.
So you're expecting your US business to keep growing at the steady clip of 25 to 30%, right, Vivek?
We expect that in the next 2 to 3 years at least. And we're also expanding capacities and our plan, taking into account these newer products coming through. Hopefully in the next 2 years, we expect to be top 3 or top 4 in India when it comes to overall capacity at our plant when it comes to injectables.
Okay, one more point. You mentioned that you're looking to acquire more ANDAs. You have 10, I think, that you're looking to snap up. Now, with respect to acquisitions, because you do have a fair amount of cash on the books, over 1,300 crores, is this going to be utilized only for the acquisition of these specific products? Or are you looking at, a more strategic acquisition of a company or an entity?
Yeah, so we're sitting on fairly good reserves, and that's going to go up. In fact, every year we're able to put away anywhere between 300 to 350 crores of cash from our regular operations itself. At the end of this year, we're looking at anywhere between 1,350, 1,400 crores of cash. And we are certainly looking at something inorganic. Nothing is advanced right now, but to the point where, we as a family hold around 71% of the company. We are not against diluting a little bit of that to make sure that we're able to sign off on a much larger ticket size as well. Doesn't necessarily to be ANDAs. ANDAs don't really cost that much, but something that fits in with our line of growth, Latin America, distribution, even something in the domestic market. These are all things that we like very much. It sort of fits in with our expectations on where the bottom lines, cash flow, everything which are very important for the company needs to be. So we're not shy on writing a much larger, acquiring something much larger as well. If you consider what we're able to do with our surplus and with also our high holding on the promoter side of the parent company.
All right. Vivek, just to clear that point, you just mentioned something about dilution. What is that? Dilution in which? In the listed entity or the holding?
Yeah, so right now we're at about 71%.
Yes.
So something meaningful comes in, and that requires a much larger ticket size. We're not against a very minor dilution of our equity as well. So in fact, we were looking at something similar to this about 3-4 months ago, but eventually that didn't pan out because we didn't understand, or we didn't really find that the future forward-facing numbers looked encouraging. But we're not against this, is what I'm saying. Many people have asked us this question as well.
Yes. I have my ear to the ground as well on this point. So a potential size of dilution that you all would look at, you're at 70%. The company is close to around 15,000 crores of market cap. So what could that quantum of dilution, if you get the right opportunity, what is the quantum of dilution you could be looking at? And by a dilution, you could mean a QIP, a preference issue, something on those lines?
Yes, all options are on the table. We're not against doing anything between 5-10%. That would probably be, between 71% and 61%, we don't really find there to be any difference at all, as long as it's something meaningful for the company, So obviously from a promoter's angle, some people are very sensitive towards this, but we know that being part of a larger pie makes better sense for us as a company, if it comes to that. But the most important part is it needs to be something meaningful. It needs to be something well run and something that really fits in with our growth targets and numbers that we're already able to show right now.
All right. So the potential acquisition size, going by the kind of dilution that you're talking about, could potentially be in the vicinity of what? Around 800 to around 2,000 crores approximately, the acquisition target. I'm just doing a back of an envelope calculation. You're at 15,000 crores of market cap. You wouldn't mind coming down from 71 to around 61%, which would mean there will be fresh shares that will be issued. So back of an envelope suggests that maybe 1,500 to 2,000 crores of equity fundraising is what you could be looking at. Will that be a fair estimate?
Something like that, and even a little bit bigger as well, is something we could do next year. But again, remember that we're not close to doing anything. This is just a statement that we are making, that we're not against something larger when it comes to inorganic, but it really needs to be within what values we stand for as a company, what numbers we're comfortable with. Yes.
Interesting. And you're saying that you're going to be getting various approvals, in place as well. What about growth trajectory and steady state margins? Two of the most, simple details that we ask for. Getting into FY26, almost halfway we're done. But getting into FY27 as well, what should the growth look like with and without the inorganic growth?
Yeah. So at this point, this year and next year is going to be very important for us because we are putting down the building blocks for many of our growth levers to really fire up after 18 to 24 months. Some of them are the continued progress that we make in the US, our entry into Mexico, our entry into the oncology business, and also our expansion of presence in Chile as well, and early entry into Brazil as well. So all of these things will start to take shape in about 18 to 24 months. Until then, I would say that we'd be at high single and low double digits when it comes to the overall company. But 27, 28 and beyond looks quite promising for us because many of these things that we are working on will start to take shape during that time.
Okay, all right. We will leave it on that note. Thank you very much for joining in and giving us a sense of the business, which you are very, very happy and prosperous 2026.
Thank you.
That's Kaplan Point. Quick check back on the screen. Let's see what the market's doing. Still down about 0.5% on the Nifty. No sign of buyers just yet. Mid-cap index is down a little more. It's down about 0.6%. However, some stocks which are managing to buck the trend include Meesho. Meesho's up 10%. Not sure what's going on over there. 188. I think it crossed above, went above 190 as well. Still holding on to that 10% gain. The other one is Avenue Supermarts. Like I was mentioning earlier, it is a high conviction, quote unquote, high conviction buy for CLSA, and their price target is northwards of, I think, 6,000. Let's go across to Mangalam to find out what is making CLSA so optimistic on DMart. Mangalam?
It's the long-term growth story. That's what everyone is excited about on DMart, right? Because it's a strong business with a fair amount of moats as well. And now every time, brokerages look at DMart in the current state, they look at valuations and they feel a little perturbed. But at the same time, that they look at the long-term opportunity and they look for inspiration outside of India as well. And that's what CLSA has done to maintain their high conviction outperform call in a 6,300 rupee target price. They've looked at free cash flow trends across global retailers like Walmart, Costco, BIM, etc. And they've said that the early expansion years typically find negative free cash flow due to rapid store additions in the company. And as this expansion normalizes, the free cash flows start to turn strongly positive. DMart, they believe, could follow similar trajectory once store additions stabilize. India's consumption outlook remains strong, and DMart has a deeply moated business model. It will be very interesting to see how this really plays out because, one part of the street definitely wants DMart to accelerate store openings. So it's not the FCF or free cash flow that is as much of a concern for the analysts than, the pace at which the company continues to add stores because DMart's balance sheet is fairly strong. So right now what the street wants is the company adding stores at a faster clip and a compounding top line a lot faster than, increasing the free cash flow to the firm.
All right, Mangalam, thanks very much for that. So that's Avenue Supermarts, 3891 on the stock right now. Chandan Taparia is with us, Head of Derivatives and Technicals, Wealth Management at Moti Rose for Financial Services. Chandan, good morning. Good to have you here. 130 points lower and lots of moves across individual names, which we can talk about. But index level, what's the trade?
Good morning, Prashant. Thanks for having me. So Nifty got stuck in a range from last couple of weeks. Declines are being bought, but follow-up is missing at higher levels. Index has multiple support near 25,700, but at the same time, sustained call writing and hurdle at 26,200, 250 is not allowing index to get the momentum. So we have to be with this trading band. The good part is that index is holding well above its 50-day exponential moving average, but the concern is FIs selling is not getting over, and FI's long-short ratio has gone to 10-11%. So I believe because of all these reasons, market is likely to be in a broader range. So we have to deal with the range between 25,700 to 26,200 kind of level. And we believe that swings could be there in this range for next couple of days. And when we talk about Bank Nifty index, comparatively holding the support, but again, mixed cues are visible. 58,500 to 59,750 is the trading band for the Bank Nifty index. Now, talking about stock specific, here we need to shift our focus on consumption and selective FMCG counter after a long time. So first trading idea is buy on Titan. After the consolidative move last 4 or 5 weeks, it has taken supported higher zone. We have seen some open interest addition with shift in support at higher levels. So recommending to buy with support of 3840, looking for an upside target towards 4,050 kind of level. Second trading idea, that is buy on Bharti Airtel. Recently, it has taken support near its 50-day exponential moving average, negating its lower top, lower bottom on daily charts. In fact, we are witnessing some put writing and short covering is expected in the counter. So one can buy with support of 2040 for an upside target towards 2180 kind of level. And one more trading idea, that will be buy on SRF. Selective chemical stocks are doing well, and we have noticed a rounding formation on this name. In fact, the longs are being added, and those are intact in the system. So with support of 2950, looking for an upside target towards 3120 kind of level in SRF.
Okay, all right, got that. Chandan, thank you very much for joining in with all the trades for the morning. We'll take a break on that note. Come back on the other side. We'll have Manisha Gupta joining in with the latest from the commodity space. Welcome back. As promised, let's see what's happening in the commodity markets. We have Manisha joining in with the latest. Manisha, what's the headline?
Well, I'm looking at aluminum this time around because we've seen prices gain onto this one as well. It's trading 13% on the higher side, not too far away from its all-time highs. It actually is trading near 2022 highs, also a year when aluminum actually made an all-time high as well. Well, there is a lot of demand coming in from EVs, from construction, renewable energy sectors, and that clearly has been supportive for the prices there. Apart from that, it is also about the copper-aluminum ratio, which is near record highs. So because all the metals are doing well, so is the case with aluminum. And aluminum also turns out as a proxy when copper gets too expensive and when silver gets very expensive as well. And aluminum really seems to be finding more usages when it comes to renewables and green energy, and that is where the support is coming in from. Also, it has been about the US tariffs to the tune of 50%. That's leading to less imports within US. When you look at the Canadian aluminum export into US, there has been a decline of 22% this year so far. Canada aluminum, of course, has been going into various other countries, including UAE and Asia as well, but the quantum continues to be slightly on the weaker side there. And then China is an important market where you have seen aluminum output close to the self-imposed 45 million tons of a production cap that China has put out. So when you look at the Chinese production, it has really gained in the last decade or so. 2007, China aluminum output was to the tune of 12.6 million tons. 2025, it stands at 45, and this is where China has put a cap as well. But interestingly, China perhaps will not put a cap on those smelters which are using renewable power. So you could be looking at higher numbers in any case in 2026 there. China also is investing in aluminum outside of China, Indonesia, for example. But Indonesia also seems to be going on with their power concerns. And whether or not all that investment will start showing result in 26 or 27 is something that the markets will keep an eye on. Indonesia exports, when you look at those numbers, well, they are up 58% on the year. And the newer capacity estimated is at around 1.4 million tons for the coming year there. If you look at European markets, well, there are power concerns there too, and aluminum sector is affected because of the energy crisis there. You have similar concerns also coming in, soaring power costs leading to smelter closures in US and Australia and in Iceland as well. And many of this perhaps would not come on board until late 2026. Take a look at the deficit numbers then. 2025, we are dealing with 100,000 tons of deficit in the global markets, which is expected to double by the time it's end of 2026. Also, take a look at the demand numbers there. So 2020 global aluminum demand stood at 86.2 million tons, while we are looking at 119.5 million tons of an expectation by the time it's 2030. It's quite varied on where the aluminum prices could be in 2026, but most global banks and brokerages believe it's going to be higher from where we are trading right now. So currently, we are trading at around 28.50. Bank of America is the most bullish, talking about 3,125. JP Morgan and ANZ are putting it to 3,000. 2,900 is what ING believes. Goldman Sachs thinks that there could be more supplies going forward. If all that projections do come alive, then we perhaps could be looking at pressure going forward. So barring Goldman Sachs, which is putting it at 2,350, and Fitch ratings at 2,300, everybody else believes that we are looking at higher aluminum prices in 2026.
All right, Manisha, thank you very much for that. That's aluminum in focus today. And looks like, a general view is commodities set to perform base and otherwise well into 2026. We take a quick commercial break here. We're going to come back, Lata, in conversation with Santanu Sen-Gupta of Goldman Sachs, Madhavi Arora of MK Global on the excellent numbers. Remember, November exports are strong, gold imports are lower, trade deficit, of course, much better than October. We'll ask the question, why isn't the number helping the rupee, which has made a new low? Stay tuned, coming up.